All right, guys, so here we are. I'm recording this after the Liberation Day. The stock market sold off aggressively on Thursday and even more so on Friday throughout the day. A lot of people feel truly liberated from their unrealized gains in the stock market, their 401k portfolios. So what happened? I mean, these tariffs were talked about for a while. Trump's administration communicated the fact that they were coming. They explained the concept of reciprocity and how these tariffs will work, what shocked the markets, and what should you expect going into next week. How will the markets react on Monday? What to anticipate in the short term? Let's discuss this in this video. Let's go. Why did markets sell off so aggressively? I think the biggest trigger for that was the actual tariff numbers. Previously, it was understood that tariffs will be reciprocal and we will match the tariffs that the other countries have already imposed on us. What was actually announced was way different. We saw a big chart, a big poster board that Trump held up that had numbers that nobody has ever seen before. What was later discovered is that the formula that was used to come up with these implied tariff rates was actually based on the deficit.
Administration took the trade deficit and divided it by the imports from that country to the United States, and then assumed that that number, that rate that they got, was all the ways that they're ripping us off, whether it's currencies or taxes or tariffs.
So some creative accounting was done to come up with these numbers. Another thing that kind of drove the sell-off on Friday was China went ahead and matched. There's a lot of irony in this, but they actually reciprocated and matched the newly announced tariff rate on China. And when they did that, Trump posted this emotional post on Truth Social basically saying, hey, China panicked, wrong move. And that spooked the markets even further because that post showed that Trump did not anticipate this move by China. So the sell-off continued even more aggressively after that post. See, what Trump administration counted on was that China will not be able to retaliate. And to explain this concept, think of it this way. Let's say you owe your bank $10,000, right? Pretty common situation. You borrowed some money. The bank has all the leverage, right? They charge you interest monthly, annually, and you keep paying interest until that debt is repaid. If for whatever reason you default on your loan, not a big deal. The bank is big enough to absorb that. Now, if you switch that scenario where all of a sudden you owe a bank a couple $100 million, the bank does not have all the leverage. Now you as the debtor have leverage over the bank because the bank is very interested in you actually repaying this debt. They cannot absorb you defaulting. So they will work with you and they'll renegotiate the terms if they have to, just to make sure that you're actually capable of paying off the loan. So United States being the debtor nation and China being the surplus nation, or the bank in our analogy, was not supposed to raise tariffs, right? If you look at history of trade, it doesn't happen because, and so it was the move that nobody anticipated. And so because it was such an unusual move by China, it spooked the markets. And what created even more uncertainty is what will the other countries do? What will the smaller countries do on Monday? Will they follow China's lead and impose their own reciprocal tariffs and kind of rally around China? Or will they all come to the negotiating table and start negotiating with Trump? You know, so everybody is going to be watching for these announcements, and I'm expecting a flood of announcements to come out on Monday from the heads of state, basically stating their kind of case and what they're planning to do, either retaliate or de-escalate by coming to the negotiating table. Based on that, the market will either rebound or at least balance out, or we can continue to nosedive further down. Now, on Friday, S&P dropped by like 6%. Last year's gains were basically erased. You could make a case that, hey, last year's gains were not real, right? We were stimulating the economy by printing money, so continuing to prop up the stock market just for the sake of stocks going up does not make any sense. The country needs a quote-unquote surgery to really take a look at what kind of operation we're running here. Right now, we're running an operation, we're running deficits year after year. The deficits keep growing, so we're going bankrupt. Something has to be done, right? And that transition from an unproductive economy into the one that actually is viable will be painful. There's going to be a realignment of supply lines, manufacturing, trading agreements, and that transition period, no doubt, will be painful economically. But the Trump administration has never communicated that. They talked about an economic boom. They talked about the golden age that is coming. But you can't get there without this period of economic pain. And the big question is, can they survive that period? Because come midterms, if the sell-off continues, they will lose Congress. And if they lose Congress, they can't continue their agenda of reindustrialization and, making these large-scale changes to the U.S. economy. So there's a lot at stake, and Trump administration has to move fast and quick to actually push these companies to build their factories here. Right now, these companies are not doing anything. Yes, there were big announcements that were made. Tim Cook with Apple came out and committed, I think it was like $500 billion to be invested here in the United States, but key part over the next 4 years. And there's Taiwanese semiconductor companies, there's a bunch of car manufacturers that came out and made similar claims. Hey, we're planning to build. Over the next 4 years, we're going to invest X amount of billions, right? And everybody's clapping, everybody's excited, everybody's taking the knee to Trump and saying, hey, we're on board with your plan. The problem is nobody's going to start building until the dust settles, until the tariffs are actually balanced out, until they have certainty that tariffs are not going to be taken away tomorrow or decreased, right? In order to make such a big capital investment like building a factory, they need certainty, they need predictability. And right now we don't have that. We don't have an environment where companies can invest and make sound investment decisions. Again, the problem is to build a factory, in some cases, you need hundreds of billions of dollars. You need to acquire land, you need to get all the environmental permitting done, you need to get the building permits done, then you need to build the factory, something we haven't done, for years now. Then you have to set everything up. And in some cases, modern manufacturing is more complex than the actual product. Then you need to hire the right people that are competent, you need to train them, and only then you can start producing a product and selling it into the market. So that lag between the start of that operation, and again, that start will only happen after there's certainty in the tariff rates. So in the near term, there's going to be a lot of pain. Maybe towards the end of Trump's term, there's going to be a little bit more movement and actual construction going up, actual production going in. Right now, all we have is uncertainty. Right now, all we have is panic in the markets. And we have midterms that Trump's administration somehow has to survive. So I'm assuming they'll achieve that by starting to send out stimulus checks when things get worse. What Trump's administration objective is we announced this tariff rates, it's the ceiling, right, of what the tariffs are, and then we negotiate them down. What happened, they announced it, other countries matched them, and there's a chance that they'll even escalate. So we started something that it will be very volatile, and we'll have to keep paying attention to how things unfold. Again, I'm not making any political statements here. I think there's definitely a need to do something. I think the way that things are going in the U.S. economy are not sustainable. The amount of debt that we're carrying, the interest in that debt is unsustainable. And here's the thing, right, with the interest rates. As the stocks sold off, the Magnificent Seven sold off, all the growth stocks sold off, where did that money go? Well, it all went into safe investments. And traditionally, the safe investment is U.S. Treasuries. And so what you saw on Friday is the 10% yield started dropping as the stocks were selling. Why did that happen? Well, people sold off stocks. They're not going to keep that cash in the bank. They're going to put it in U.S. Treasuries to at least get 4 or 5% on their dollars. And so the increased demand for U.S. Treasuries actually drove the yield down. And that's what Scott Bessent wanted to achieve, right? When he came into the office, the 10% yield was pretty close to 5%. And on Friday, it dipped to, I think it dipped below 4%. So that was a huge decrease. And that's a win for Scott Bessent because he has a lot of national debt coming due for restructuring, refinancing. And he's very interested in getting that 10-year yield down. And so you can say that all of this is part of Scott's plan, bringing down the 10% yield because your credit card interest rates, your mortgage rates, your car loan rates are all tied to that 10% yield. So having that drop lower is actually very beneficial to the low middle class kind of portion of the population, because yes, the top 1%, the upper middle class, they have big exposure to equity markets. And so they're really hurting now, they're panicking. But for people who don't own stocks, all they care about is how expensive is my mortgage interest rate, right? What's the interest rate on my car loan? That's what they care about. And that percentage is going to be coming down as the stocks continue to sell off. That's something to keep in mind, that the market sell-off impacts people disproportionately. And for some people, it really benefits them, right? For the lower class, for the blue collar workers, a lot of them will not notice this hit, at least immediately. They might notice the inflation going up as a result of the tariffs in the next quarter. But for now, they're kind of sheltered from the shock that equity holders are experiencing. So are we headed for more liberation coming next week? And when I say liberation, I mean liberation from our unrealized gains in the stock market. Like, subscribe this video. I'll be dropping more breakdowns like this in the future. See you next time.